Welcome back to the channel, guys. We need to talk about the recession and what is happening in the macro play in the economy and the major differences between what is happening with the poor and middle class compared to what's happening in the markets with investors, smart money, and where all that money is going. That's what I'm going to focus on in today's video. Go through a timeline of what it is we've been talking about, how I'm playing the market, what I'm thinking and seeing, and the experience that I've had over the last 16 years in the market. Basically, I'm here on this channel, my channel, to share what I've learned over the last 16 years because I want more people to see what I'm seeing, of course, and then not make the same mistakes. I'm not gaining anything else from this apart from hoping that more people are going to see the cycle for what it is. Now, I'm not discounting anyone's feelings or their experiences if things are getting tough for them. I am purely focusing on this channel I'm focusing on investing, trading and investing, how I make money in the market. Of course, a lot of the time it can sound very emotionless. Sometimes it looks like that I'm disconnected from what's going on out there, but I prefer it that way when it comes to my own investing because I need to be disconnected from the emotions if I'm going to make sound decisions with my money in the market. If I allowed those feelings and emotions about stuff that we can see around the world, things aren't going too well for a lot of the bottom end of society, then that would definitely screw our investments. So that's what I'm talking about in today's video. I've put a big post up on Twitter as well, so I'm going to include that so you've got some reference to go back to if you're interested to see how it is I'm viewing this cycle, why I'm making the bigger decisions that I am, and basically this is going to be focused on the macro. I'll do another update video on cryptos today as well, so do all those good things if you don't mind. The likes, the subscribes, all that sort of stuff, because yesterday's video that we're looking at, this is the recession video here. I'll bring my face back up. This one here triggered a lot of people. That's okay. I can understand the triggers. The triggers are just part and parcel of the macroeconomic cycle. And if I got offended by each of these triggers from people, I wouldn't be doing what I'm doing. I would basically just shut up shop and leave. But I've been online for over 8 years now. I've seen the worst of it. I've been in the vegan fields as a strict vegan, posting about that, what happens in the economy and that sort of stuff. It's basically child's play compared to what the vegans do. But enough of that. Macroeconomics. Where is this recession? Technically, 2 quarters of GDP. Sure, it's a recession. But like I've been saying since the beginning of the year, these terms are there just to screw with us and basically make us feel and think certain ways after the fact that maybe the bottom's been in. Think about the top in Bitcoin just as an example. We try and bring that back a step. The tops, all of that we were hearing from the major influencers, because that's pretty much where crypto is on YouTube, Twitter, and then it gets into the mainstream media. Those major influencers, your big channels, the 500,000 pluses, not all of them, and maybe my channel will be there one day, so I'll have to stay humble with all that, but a lot of the major channels we're talking about 100,000, and some may have said 100,000 but just use it as a title, but a lot of them believed we had to go to 100. This is the time, we're going up. The same thing, the exact same thing happens at the bottoms. A lot of this extreme fear happens at the bottoms. So just looking at this quick question here before I have a look at Twitter as well, I'm saying, are you seeing signs of an all-out global crisis in your country? It's kind of, I didn't mean it as a trick question, but now when I read the comments, it almost sounds like a trick question. So I'm seeing a lot of the comments here, and this is some of the feedback, from you guys, and we start to put this into a macro picture. We're trying to be investors here, not what we're seeing every day. I'm looking out my window here in Greece, and there was a lot of comments there about, you're just in tourist areas. It doesn't look like it's a beautiful sight here. The waters are beautiful, but the streets are the streets. It looks pretty dirty. It's Greece, but the Greek life is amazing. I wouldn't change it for anything. I love it. But what we're seeing here is, unfortunately, yes, people that were just barely making it now are falling behind more and more. Their credit card debt is increasing, defaulting. Renters are being evicted. Rates have literally doubled. Yeah, I've seen that. I've seen it in Australia too. It's a tsunami that only looks like a ripple. No pun intended, but the US Fed will have to print more money, in my opinion, pushing recession off for another few years. in that case, if they are pushing the recession off, but if it's here, it's here. But if they're pushing it off, that leads us into that exact peak in the cycle. Okay, so that is actually leading into the right timing. But the way I see things, and I know it's not going to be the same for everyone, this unfortunately doesn't really mean anything, broadly speaking, if you've got the poor and the middle class. I say that with all due respect. We're just trying to be investors here and not worry so much about the emotions of people's situations. We're doing this for our own investment. That's why we're here. This doesn't change the cycle of people are falling behind right now. The land values are the key indicator here, and land values are holding up. So if you take anything away from this video, take away that you need to see the land values start to crumble if we're going to see an all-out global financial crisis type event. So the GFC basically began in the peak of 2007, and then we had the real big fear around September of 2008. That's when the Lehman Brothers and all the other stuff came out in the news. So, a year later after the peak. And then we had the bottom in March of 2009. So it wasn't that long from the peak to where we had that extreme news of the fear to then that bottom. So if I take a little step back here and just show you what it looks like on a chart, everyone was getting extremely scared in these periods here. So this bar, October and September. You had another 1, 2, 3, 4, 5 months to the bottom. I'm not saying this is what's going to happen this time. We're maybe 5 months away from it. Who knows for sure. But you're really seeing it at the end when that extreme fear comes out. That's basically the capitulation event that everyone talks about. And then the price didn't really go that much further. So look at this closing price for October, or even if you want to take the low to prove my point, I'm cherry picking here. That's 20% to the bottom, but this is the extreme case, and this will happen. It will happen again at the end of this cycle. We're looking somewhere around 2026 or thereafter, maybe a little bit after. We'll know closer to that date. We're still many years off that at this point in time. So I know a lot of people say, well, you said 2026. No, it's around that time. We'll be able to tune that up as we get closer to that date. So this is where we're at the moment. Hang with me here. We're looking at some of these comments back. This is the feedback, looking at the recession. Technically, sure. But in terms of what's actually going on out there, we're seeing a lot of this sort of thing, for example, in Australia. I'm seeing it here, of course, in the tourist towns. This is where a lot of people come to make their money through the summers, and then they take a bit of a break during the winters. Yes, I've seen it across different areas in the world, and I don't just stick to the tourist areas. I've been traveling since late 2013, so we're coming up to 10 years that I've been going backwards and forwards around the world, Southeast Asia, Europe, Australia. And yes, maybe I can cherry pick certain areas, but basically I like to do a bit of the research on the ground as well, and things aren't as bad as what they're making out in the news, especially if we're at home in our comfort of the US or the UK or maybe some other places in Europe as well. So basically, I try not to get mixed up in what's happening in this, what's happening to the lower end of society in terms of financially, not anything else in there. Obviously, we're not judging people here. It's just financially because we're an investment channel. So basically what's happening with that point is they're not making the decisions when it comes to the overall market. So this is my thread here on Twitter. I'll leave a link to this in the comments section. So not to make this video too long, this is where I want to focus more of the time now. So we've seen a few of these comments here from people. No, living in Portugal, spent some time here. Everyone has money in their pocket. Tourism's up. Business is thriving. Many projects are put on hold during COVID, of course, and everyone saved a ton of money in COVID. Look at those statistics. There was a lot of money. There's abundance of jobs, shortage of labor. That is exactly what is happening next, and wages will go up. They're beginning to go up in Australia as well, because there is inflation there. So those things will go up, and that's how we start to balance, but things will peak and then bust. But that takes a few more years because we're in a macro cycle here. So like I said in this, not to make it too long, as an investor trader, my job is to identify the trends and trade them exactly how I see fit, and that's why you're here, because this is my opinion and how I'm trading the markets. As sad as it is, the struggling lower and middle end of the population aren't the market movers. We have to agree with that. They're not the market movers. We know that. The big money is not in the bottom end. That's why there's a whole thing about the top 1% controlling the 90% of the wealth or 50% of the wealth. That's exactly what it means. So I'm interested in what the big players are doing. I check the charts. That's how I've been doing over the last 16 years. So primarily, land values are the primary key here to determine whether we're at the peak of a cycle or if we're in a mid-cycle and we're sort of coming out of that. What we're seeing now is not land values collapsing, but they are having a small pullback in some areas, and it is natural and must happen because that's the way markets work. We go up 100% in some areas. You guys tell me in your areas in the comments, it's like how much has land value, real estate, call it that, not just homes, because the home's the depreciating piece of the whole property, but the land, it goes up and then comes back in a corrective fashion and then goes up again. All right, then we have the big corrections. All right, so what I've learned, news is always late, always fearful, no matter what, it sells the best. We know that. That's what we see everywhere. We've got to be open to that now. So I discount the news, focus on the charts. The charts are the facts. So the recession is basically what we keep hearing over and over and over again. And that's what they want us to hear, because trying to push the prices down a little bit further to give us that last buying opportunity. So, we're seeing the market move up at the moment because from what I can see, the interest rate rises were basically met. The expectations were met. So everyone's, well, at least smart money are trading that to the upside. So even if we get further downside, which potentially can happen later this year, maybe in Q4, then I'm still seeing that as part of this mid-cycle playing out to the textbook, right? That can happen. We've just gone on a massive run. So the correction is looking pretty clean. And once you start to look at these charts for a little while, this looks pretty clean. I would be concerned if this came down, but then started to come back up and form a lower top. And this can take many, many, many months and form a lower top somewhere around these peaks here. And those peaks in terms of a price for the S&P is about 4,500 to about 46, 4,700, right? If the market formed a lower top and then started to come back down without any support, that would be the signal that we're just about to collapse again, but at least would have that move up to test those levels, okay? That's not going to be this year. I think that'll happen 2023 or 2024, something like that. All right, so moving on to what I talked about with the land values, that is what I'm talking about here. We need to see that if we're going to have a collapse in the markets. We're not seeing that at the moment based on what I'm seeing here. Land prices haven't collapsed. Definitely go and check out Phil Anderson as well. He's got a free ebook on this. So this one is just a side note to stop the heartache, because I don't want to see the booms and busts. And to me, the answer is to stop the speculation on the land. If you stop speculating on land, then people can afford to get in and out of properties. The whole value is not going to be there to speculate on property prices. And you have to go and build businesses and be productive in society. Just speculating on land is not productive in society. Okay, that's a beautiful free ebook on that to learn a bit more. So in conclusion, technical recession, sure. Inflation, sure. We know that, it's there. We have the poor middle class doing it tough, but we haven't seen a collapse in the land values. So if you take a step back from the media outlets and see what the big smart money is trying to do right now, I think it's pretty crazy. Once you see it, then you're basically in the driver's seat, and you just have to be patient with the macro cycle, which takes a lot longer than cryptocurrencies. So that's what I wanted to share when it comes to this whole recession talk. I think that we are, well, I hope that we eventually see through this and not leave it too late, not get too caught up in the fear of the recession and people doing it tough. Sure, it's true out there. I want you to go away, do your own research on this as well. If you want more research, of course, check out the 18.6 year cycle. Check out some of the videos I've done on this channel with Phil Anderson. Search Jason Pizzino, Phil Anderson interviews. There are 2 of them talking about no recession in 2022, the current year that we are in. We did this in February and then an update a few months later. So there is still no recession in land values. And that's what Phil primarily focuses on, and that is what we are talking about here. If you want to look at a technical recession, sure, GDP is down, but the land values are what holds up the entire world in the investment space. So if they're to come down, we are in fucking trouble, right? But they're not coming down at this point in time. We are not in that sort of trouble. So I wanted to leave you with that. That's my outlook on what's going on out here in the macro space, not just the day-to-day crypto trading, but yeah, basically in the macro space. And I guess I just want to highlight one more emphasis here when it comes to the news. This happens on everything we do in the market. Huge news. This is oil, right? Remember, oil was pumping. We had lumber that was pumping last year, and people were just saying, how is this? No one can afford anything anymore. these prices will probably still keep going up in the later half of this cycle, the commodity prices. So I'm looking at oil here, and the example I'm giving is what the media does. Hope we're all seeing this now. Huge news of oil when it pumped that week in February into March at about 130 bucks. And now we don't hear anything of it, even though it is put in a lower top, exactly what I was saying on this chart here, if that's what happened, the same sort of pattern played out, and then we get the crash. That is a weaker signal. Now, I think we're going to have higher oil prices, coming this decade, this year, next year, whatever, but you can see that we had that collapse from about 120 bucks all the way down to about $90. So these things do take time to play out, and I just wanted to bring that up, make a mention of that, so that we can see this for what it is rather than just the news headlines as they continue to pump all of the fear at us. Don't let that dictate your financial plans. The news is terrible at basically telling you what's coming next. They're really good at telling you what's already happened and then pushing you in a certain direction when it comes to emotions. So I want to leave you with that. I know it's been longer than what I expected, but hopefully that clears up what it is, and I'll leave a link to that Twitter post in the video description so we can get a better idea of what I'm talking about when it comes to the macro cycle. We're still on point. Macro cycle is still very much in play. I was wrong to underestimate, or maybe it's better said, wrong to not give a much more clear explanation about what it is that I'm talking about when it comes to the macro cycle, because there are a lot of new people joining. That is my update when it comes to the macro play of the economy. We're still in good hands at this point, but the fear does get very, very loud, especially near the bottoms. So I have bought Bitcoin, I have bought land. I am now patient for the longer play in terms of cryptocurrencies. Trading is the game here for me. And in terms of dollar cost averaging for other cryptocurrencies, I'm still waiting on that, but I'll do an update video. So thank you once again, guys. I hope you are enjoying your days wherever you are. Don't let the fear get into your brains, no matter what it looks like out there. We're an investment space here. We're an investment community. And I hope you enjoy that and see what it is. You basically see the bigger picture for what it is. All right, it's enough of me. Thank you once again, guys. Peace out. See you at the next video.